You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates, and happy Friday, July 3rd, 2020. We are #1 on iTunes, Spotify, and Google Podcasts for Toronto real estate as we continue to figure out what in the world is happening in our local market as COVID happens in and around our city. And today we got some good stuff. We're going to talk about pre-sales, and property units seem to be getting more inquiries from Hong Kong due to the recent protests. So I want to talk a little bit about that and whether there's an opportunity in here for them to buy local real estate. And then, did people apply for mortgage deferrals just to take advantage of that program? As we're kind of watching for this deferral cliff, as many people have called it, that's going to happen in the fall. If this is the case and people are just kind of taking advantage of the opportunity, maybe it's not as big a problem as we thought. So I want to jump into that and put my insights. It comes from a wonderful comment online. And then, what makes the best city in the country to buy real estate worth buying? And we're going to look at a city that popped up #1 in Money Sense, and we're going to discuss why exactly they're there and what are the key factors that people are considering in their investments in identifying the top cities in our country these days. And no, I didn't have a crazy candidate party the other day, and that's why I couldn't get up yesterday. That is not what happened. In fact, I was out the door probably before you guys woke up because I had a bunch of running around to do and getting listings and showings and whatnot. But you know what? I did have fun on Canada Day. The extent of my parties, by the way, was making smoothies for my girls. They had bananas and strawberries and avocados. And you know what they say about my milkshakes. They bring 10 people, socially distanced, of course, to my yard. Yesterday was actually a very quiet day for news, with reporters probably on holidays, and this is why I didn't do a video. And so I'll make it up to you today because I wasn't sitting on my hands. In fact, I actually wrote up the content for next week's video that we're going to be uploading. And I'm going to give you a sneak peek at that at the end of this podcast, just as an apology for not having said I'm going to miss a day. But we are back, and I guess now is a good time to ask a question to our loyal family of listeners. Guys, what should we do when the news cycle spreads out? Because obviously there is news happening daily, but there is now coming a point where there gets to be a bit of repetitiveness, and I don't want to come at you with no good content. I want to make sure it's jam-packed. So leave it in the comments below. If you're following us on YouTube, let me know what you think would be ideal for these circumstances, because I do want to meet you guys every day. I love it. But I have to recognize that the content needs to be spread out a little bit more as time progresses. So let me know what you guys think about that. Okay, let's talk about the local market. Can we have some fun? All right. We're going to talk about Hong Kong. That was pretty good. There's an article that comes out of financialpost.com. No exodus from Hong Kong yet, but interest growing in pre-sale property units in Canada. In our past podcast episodes, I've talked about how I have clients who typically wouldn't look at pre-sales, but they're considering them. And the big reason for that is because of the fear of not being able to find a tenant. That's kind of the underlying reason for local investors wanting pre-sale, because they're not confident they're going to find a tenant in the next month or two. And even if they do, they don't want to deal with the risk of all these bad tenants that aren't paying rent currently being their options, right? So we've been talking a little bit about pre-sale. And so this article comes as very interesting news, because as you guys have probably heard, and I'm not going to claim to be any political expert on what's going on in Hong Kong. No way. But we all know that there's protests going on, and obviously there's a lot of uncertainty, and Chinese continue to try and take control over Hong Kong. So here's the article, and here are some of the facts on how it's going to impact potentially our local Canadian real estate market. Ashley Loom sighs impatiently when asked why, despite the looming threat of greater Chinese control over Hong Kong, she's choosing to remain in the city-state for the foreseeable future. So she said this: "Look, it's not simple to just get up and leave your home," the 36-year-old wealth manager told the Financial Post over the phone recently. "I'm from Hong Kong. I've been in the protests. I'm supportive of the protests. I'm angry of what's taking place and I'm scared. But it's also hard to uproot myself and my whole family and move overseas. This is a big thing going on. In fact, it took effect. This Beijing drafted national security legislation took place while we were celebrating Canada Day on July 1st. So this is all new. And it's scary, and it has a lot of world leaders turning their heads to say, what do we do now? What do we do about Hong Kong? There are approximately, according to this article, 300,000 Canadian citizens or permanent residents in Hong Kong. As protests have raged on since last year against China's increasingly aggressive attempts to exert control over the semi-autonomous city, realtors across Toronto and Vancouver, with clients primarily from Hong Kong and mainland China, because there are people who specialize in that, have braced for a wave of inquiries about Canadian real estate. So, as I continue reading through this, there's two pictures being painted here. The first is the Hong Kong local, like someone from Hong Kong. It goes on to talk about here, and we'll kind of see that in a minute, that they're not looking to just run to Canada. In fact, most of their investments are in other places because it's more expensive with local taxes to come here. However, there is such a huge wave of Canadians in Hong Kong that even if that were to be all that comes back to our country, it would be a large number, 300,000 to be exact. So here we go. They received inquiries, but it did not necessarily translate into purchases. So they're getting leading indicators that there might be more buyers for pre-sales. My client, who is Canadian and moved back to Hong Kong about 10 years ago, said she's looking for a pre-construction condominium to purchase. They're inquiring, but I wouldn't say units are selling very fast. And I would make the case pre-construction right now, they're not selling all that fast. And I don't know what that is. I don't know if that's because of uncertainty or what's causing that, but they do seem to be moving slower than the market is moving. And maybe that's because a lot of the ones downtown are condos. And as we're going to hear later in this podcast, condos aren't doing so hot. This client called me because she said the national security law is concerning. She wants her son to move to Canada to study next year. So we've got people from Vancouver. One agent here, president of McDonald Real Estate Group, said developers will see success from what's going on in Hong Kong because they are selling pre-sale units. But you are not going to see it in the data because these units are going to close for another 3 to 4 years. So this is going to happen later. And some of them, I think, are planting their flag in Canada by buying up these units with an anticipation that they're going to come back. And obviously that doesn't happen overnight. If anyone dug into the statistics of how much money is leaving Hong Kong and coming into Canadian real estate, I think they'll be surprised at how minimal it actually is. We've talked about this in past podcasts as we're kind of tracking immigration, because there's a difference between immigration and foreign investment. And so if obviously Canada and specifically Toronto is great for immigration. We have a lot of people moving here. They want to live here and reside here, in which case they don't count into this foreign buyer tax. But foreign buyers, specifically people investing dollars, that number has been decreasing since 2016 steadily. Since this foreign buyer tax rolled out, it's been a constant dropping of foreign investment, foreign dollars coming into Canadian real estate. So this person is pointing that as an issue is really, if you were to just consider the money coming from Hong Kong, it's very low. Like you would be shocked how low it is. Okay. Here's another quote, but I do know that some folks in Hong Kong who are Canadian citizens or have family in Canada are on high alert and are preparing to come back in a moment's notice. I suspect you're going to see more of this trend in China continues to be oppressive, and especially if they bring troops in. So what this means for our local market is to be determined. But it's absolutely, in my opinion, from the last news I've seen in the last 24, 48 hours, the most important thing. Because that's a lot of people, right? Like, yes, we can have an inflow of evictions coming on the market. That's a splash, right? But this was an unplanned international splash that could have big consequences. It's also something nobody else I've heard really talking about until this article, despite it being such big news from a global perspective, from a real estate perspective, it's still very hush-hush. One developer told me that they sold, this isn't me, this is me reading, that they sold 19 units last weekend. And of those 19, 16 were Hong Kong-based people with the intent of coming to live in Vancouver. So it's not the rent it, flip it kind of thing. These are 2-bedroom and 3-bedroom units. Again, we're going to see this in the stats that happened in June. This is great. It lines up. The conversation lines up. 2-3 bedroom units, they're doing pretty good relative to studios and ones. So we're going to get there. We're going to get there. That's what I was preparing yesterday for you, and I'm so excited to launch that because I actually took quite a bit of time to just analyze the stats for last month. I don't know what the major news is going to say because as this is kind of coming out, and over the next week, you're going to hear with the TREB stats, when the TREB stats come out, you're going to hear conversations, and I don't know what that's going to look like, but I know what my conversation is going to look like, and that's why I'm so excited to share it. CBRE data points towards large institutional capital and commercial real estate going into, listen to this, Europe more than North America. So remember we're talking about this foreign dollars? They're not coming here. It's not coming to Canada. In fact, commercial investments, a lot of it is going to London. So there you go. I'm trying to think of a London accent. There you go. I can't do it. Would you like some crumpets with your real estate investment? Terrible. All right, moving on. Most of the calls I'm getting are dual nationals. They are professionals. They have enough money to buy a place, but they would have to sell their place in Hong Kong first or refinance it, governor. There you go. That takes time. So most of the people that are going to be buying are they're either dual nationals or dual citizens, meaning they're from Canada. They have roots here as well. Scarrow believes that one of the less considered trends, I love this, I actually have this bolded, that's taking place because of the pandemic and China's looming grip on Hong Kong is fewer Canadian migrants or migration to Hong Kong. In the past 10 to 20 years, there's been a brain drain, and we had this conversation. I think it is more of a brain gain, but they're saying in this case to Hong Kong, it's a brain drain where what's happening is many students come here, they do school, and they find jobs in Hong Kong, London, and Shanghai. They leave. What they're saying here is that leaving part isn't going to happen, which would obviously stimulate our local economy. Like if you're making that jump, why jump back? Just stay there. So there you have it. Make your investments accordingly. Obviously, we're going to see different pockets that have an overflow of this investment from Hong Kong, but I think we'd be naive to think it's not going to have an impact in our local market. Of course, Toronto and Canada shines as one of the great countries as it relates to standard of living and among COVID. And if Hong Kong is a place that's going to leave, we are absolutely going to be on that list of places to go. All right, let's move along. I've had some great comments in the last couple days that have come out from some of our listeners as it relates to our market. Prabhu Raj Kumar said, inventory is low. People are waiting to list in the fall when economy rebounds. That could be the case. I am actually seeing a trend in inventory going up though, and we're seeing that in the numbers. So you're saying relative inventory is relatively low. Possibly it's low relative to demand, right? So interesting. Let's see if the economy rebounds in the fall. I guess if that's an optimistic way of looking at it. Some people would take the other approach. Inarab Rub, cool name. It only means COVID effect on housing market is fake. Happy days never left in the housing business. Well, tell that to people 2-3 months ago when we were saying it's a good opportunity to buy. They really missed out. The money when we're looking at these stats for June is incredible. When we're talking discounts on some of these homes, guys, we're talking hundreds of thousands of dollars. Hundreds. Not tens, hundreds. So these moments in history where you get these price discounts and then you sit back and think, oh, the world is collapsing, and you miss on the low buying opportunity, it is crazy. Okay, but I wanted to take this conversation into mortgage deferrals. And Brian Jordan, who has become an awesome commenter, has left awesome news and awesome points that are worth sharing. In fact, I'm going to share another one from him in a minute. But this topic was a good question because it's something I've thought about, but I never really put it in a podcast because I didn't think it was something other people thought of too. Sometimes that's the problem, by the way. Sometimes I'm thinking of things and I don't know what you want to hear. I don't know what the buzz is. So hearing from you guys is great. So here's the comment. Thanks for the podcast, Bradley. In regards to mortgage deferrals, I have read that savings rates have overall increased during COVID, right? So, and we've known this, we've tracked this. We've seen that number of even credit cards are going down, debt's going down on a personal level. Is it possible that some of the homeowners that have opted to take the mortgage deferrals and save/bank the money that they would have paid on their mortgage for a few months? So in other words, even though you didn't need a mortgage deferral, are people just getting them because there's an opportunity to, instead of paying for your mortgage, to just bank the money? Basically, mortgage deferrals simply increase the amortization on the mortgage while increasing the interest cost. This is true. For the most part, the unfortunate people that have lost their jobs are in the lower paying service sector. Most of these people are renters. Therefore, a large portion of the people that are deferring mortgage payments would still be employed. This is also true. So I don't want to get tripped up on whether they own or rent. And the reason for that is because behind every renter and not making those payments is a landlord, most likely a small-time landlord, who's trying to make that payment and not collecting rent. And obviously there hasn't been support. So those, I would still say those homes would be affected. It just wouldn't be affected on the side of the renter. So I was trying to do basic math to just kind of wrap my head around this because I know my thoughts and I'll share them and they line up with the stats. So pre-COVID unemployment, let's take the numbers. In February was 5.6%. Recently, according to a few news sources we've seen, they've floated at 14% now across the country. And by the way, they expected 20 to 25%, maybe even more. I've seen like more than 50%. Like people go crazy when you're in the heat of the moment. People's predictions they go off the rails, right? But anyways, so we've got 14% unemployment, and I think we're pretty much hovering at this point. It's not going to fluctuate up or down much. Hopefully down. So that means that's approximately 8 to 9% of all Canadians, right? And the total Canadians, there are 37 and a half, just over 37 and a half million Canadians. So you'd expect by those numbers, let's say those are the people that would qualify for mortgage deferrals. Even if you took it in half, because half of them are renters. That with the full amount, with everybody in, that'd be 3.38 million. If you took the half, then you'd be still 1.5 million, right? So a lot. So when we look at how many deferrals were taken, we see that of the 13 member banks of the Canadian Bankers Association, so the big guys, there were more than 720,000 Canadians who deferred. So in other words, less than half of half being half that are owning, right? So in other words, we have a quarter of all unemployed people that have applied for mortgage deferral. So in that number, are there maybe people who have applied for it that didn't really qualify and they thought this would be an opportunity, which I don't think it is, but maybe they thought it was. So here's the way that I look at all of this, okay? Before seeing these stats, the reason that I thought that it wouldn't be that big a factor is because of this. And this is also why I didn't bring up this video, because I thought, well, it's kind of a moot point. But obviously it's a thought, right? It's a thought that we need to dissect and nip it in the butt. Okay, I thought of this too, but because I haven't seen it in the news, I wanted to see if people were, quote, taking advantage. So the immediate news, if you guys remember, back when the mortgage deferrals first came out, was that it was bad. It was supposed to benefit people. If you guys remember this, it was supposed to benefit people who needed it, but generally it wasn't good because it would, and you remember the articles were like, if you defer your mortgage, your net interest payments are going to be this much more. And they'd have these big fat flashy numbers and examples. I don't know if you remember that. There was also questions on whether it would impact your credit, right? Because you're not making mortgage payments, which in a normal month would be good enough to have your mortgage removed. So are they tracking this? Could it pose other problems? And of course, increasing payments on the other end. So I think because of the news being generally pessimistic about taking it unless you absolutely need it, not to mention the qualifying in the process, like you have to apply for it, like it's a pain in the butt. The only ones I think who did are people who are struggling, in my opinion, or at least the vast majority are people who are struggling. And so it'll be interesting to see what happens when you get not only your payments come back because you haven't had them, but also higher payments than you saw before. And this explains why, in my opinion, it could be part of the reason that people's personal debt is going down. So let's say you're a person like myself who doesn't run credit. Like I don't run credit cards up. I use it to get points, but I really don't need one. So when that happens, so if I were to, let's say in my case, I wouldn't apply for a mortgage deferral, right? Because I don't have debt. Does that make sense? So I don't need to apply. I'm in a comfortable financial position. Now let's take the complete opposite. So we've got someone who now has $20,000, let's say, in credit card debt, and they've got a mortgage, and now they're unemployed. Okay. And they're used to making their mortgage payments. Let's say they're falling in that bracket where they actually own a property. So they say, you know what? I'm going to apply for this mortgage deferral, but then all of a sudden I've got this CERB or this payment coming through. Where am I going to use it? Because I don't need to make the mortgage payment. So I might as well put it down on my $20,000 credit card, which I most likely have because I'm a person who runs on debt. I'm a person that's not really saved. I'm in that, I'm in a lower income type of bracket. So there's different people groups. So absolutely, you can still, I think, you can still see the personal debt amounts being brought down because the personal debt levels appear in the areas where people have mortgage debt. They have mortgage debt they can't service because they're unemployed. I think that's the group. In fact, I would even argue you might actually see personal debt not really going down, because someone like myself, I wouldn't be paying down debt if I did qualify for a mortgage deferral. Instead, I'd be taking that money and I'd be buying a property or investing it, right? So the habit of not paying a mortgage and therefore taking the money to pay it down the personal debt, to me, also paints the picture that those qualifying and who have the mortgage deferrals are the ones who actually need it. I'm open to other arguments. I'm open to other thoughts and insights, but there hasn't been any news on this. This is outside of the eyesight of the news, but it's a wonderful question, because obviously if I'm wrong, right? If in fact there is a huge chunk of people who just are taking advantage, as it was said by Brian in the comment, that would mean that the the mortgage deferral cliff is like more of a little diving board or something. I say a little diving board, and I'm sure there's swimmers out there that are picturing like 50 feet in the air. All right. So things are reopening. Things are moving good. And news is getting boring in some cases. But also another comment from Brian. Again, I told you he's got some good comments. He posted a link, which I thought was interesting. As of July 1st, 2020, there was an article from Canada.ca. Immigration, Refugees and Citizenship Canada, or IRCC, will once again process online applications for visitor visas, including transit visas and electronic travel authorizations. So, in other words, they're starting to reopen the ability to qualify for different types of visas. But here's the big but. Due to current travel restrictions, applicants should keep in mind that even if they apply to be a visitor visa or ETA, most people will not be able to travel to Canada at this time. So you can apply, but you're going to have to wait to come. And they're also continuing to process study permits, work permit applications, permanent resident applications, which was allowed before, to the extent possible. Paper applications for visitor visa, study permits, and work permits will not be processed. So if you're looking until further notice, so paper applications aren't being processed. It's all online. Well, there you have it. So although it's not completely doors open, our country has obviously got closed borders in a lot of ways. And even in this article later on, they talk about how you need to kind of stay hidden for 14 days. We are starting to see a progressive reopening of our border in the way of immigration, because we know immigration is so important. A wonderful article. Thank you for sharing it. Things to keep in mind, guys. All right. Let's move on to our third topic, this idea of what makes the best city in the country to buy real estate worth buying. And I didn't say at the beginning of this podcast, because those of you who have been tracking with us probably already know, but if you don't, we are talking about a little old city called Guelph, Ontario. There's actually an article that came out of the Star before I go there, and the headline was this: "They are buying everything. Cottage sales surge by as much as 25% as Torontonians flee the city." And I thought, what a perfect headline to cue us into Guelph. This idea, this trend that we're seeing of people leaving the big city in hopes of finding something greater, namely Guelph or cottage country. Here's an article. I thought, you know what? I love when winners hold their hands up. It's kind of like you're watching this podium. Guelph is in first place and they're popping to champagne. So I'm like, there's a few other articles that kind of featured Guelph, but I thought, you know what? Let's go to Guelph. GuelphToday.com, their local newspaper. This is what they had to say. Money Sense magazine says Guelph is the best city in the country to buy real estate. With an average house price of $527,000 and low unemployment, the magazine pegs the Royal City as the best place to buy. They say Guelph is the best city in Canada to buy real estate in 2020, moving up from second spot a year ago. So they were already up the top. Now they're number one. Strong economic fundamentals helped. So here's what I wanted to discuss here. What makes them number one? Like why Guelph? Strong economic fundamentals helped Guelph, Ontario top the Money Sense Where to Buy Now ranking. Plus, despite the value of Guelph's real estate, average home prices are still less than $530,000. So there's factor number one. It's cheap, right? You'll remember that a big part of it was the momentum. There's a fast increase, which actually threw me off a little bit about Guelph because they have grown in value tremendously. They say the average house is $527,000. It says the 5-year dollar appreciation of a Guelph house is just over $65,000. Pretty good appreciation. That's over 10% in the last it says $5-year dollar appreciation of a home. So I guess they're factored in for the value of the dollar and inflation and everything. So anyways, they ranked Guelph out of a list of 35 as number 1. Also in the top 5 was London, Victoria, Ottawa, and Kingston. None of them being Toronto. Toronto was way down the list, if you remember. Money Sense cites the city's strong economic fundamentals as the main reason. So given COVID, a big part of that article was this idea that we need strong economic fundamentals. We need strong employment. In fact, the unemployment rate in the city is 350 basis points below the national average in pre-COVID times. So they're actually outperforming the rest of the country before COVID. Combined with a strong average household income, they're making lots of money. So there's